In this video, we're going to review another financial report, kind of complete our series of what I would say are the core three financial reports: the profit and loss, the balance sheet, and the statement of cash flows. The statement of cash flows is probably the most confusing out of those three reports. It can be very hard to understand why some numbers are positive, why some numbers are negative, what the heck is going on. So in this video, we'll go over one together and we'll try to solve it. In summary, the statement of cash flows is going to start with the net income, that number that's at the bottom of our profit and loss, and basically compare that to our cash improvement. Because sometimes we have a month where our profit was, let's say, $5,000, but our cash went down that month. Maybe our cash went down $2,000. What's the difference? What happened there? The statement of cash flows answers that question. Let's go through an example. Here is our statement of cash flows for our beloved ABC Salon. Just like we talked about already, what this is going to answer for us is why we have $9,700. You can see this number right here, $9,700 of net income. But if we skip right to the bottom, see that our cash went down $19,000. So it decreased $19,000. So what's that big difference there? How did we have a profit and yet we lost cash? This will answer it for us. And this is really common because we can often feel really confused as business owners. My reports say I'm profitable. Where is the money? Why am I not seeing it? Why am I not feeling it? Let's go through it. And we'll see in this example how that can be the case. So as we go through each of these lines, again, we're going to do this slowly. This is one of the most confusing financial reports. I get it. We're going to go through each line and talk about the number and walk through it. So a positive number means it's something that is adding to our cash. So we had $9,700 of profit. All of these lines are things that are outside the profit and loss. Most of these are found on the balance sheet. So things that went up or down that were not necessarily expenses or income that are affecting our cash. So accounts receivable. That means money that was owed to us. Outstanding invoices, whatever kind of obligation someone owes us money, that's what this is. So there's a positive $5,500, which means we collected $5,500 of outstanding payments owed to us. So that's positive. That's adding to our net income. If that was the only thing on here, we would see about $14,000 of cash increase, but it's not. Here we can see four different inventory categories. In ABC Salons, we're breaking out our inventory. And so we can see that three of these inventory categories have negative numbers. One has a positive number. So the ones that have negative numbers means we spent cash to increase our inventory. So our hair extensions, our retail, our professional use, or back bar inventory balances went up, but that took cash. And that wasn't reflected on the profit and loss because we're not going to expense our inventory until we use it or sell it. So we're building up inventory that takes cash. So that is going to reduce our cash. It's going to use up some of that net income and that profit. And then the inventory color, that line is positive, which means our balance actually went down. It means we didn't spend cash to replace that balance. So we kind of used up some of what we had on stock and let that generate some cash for us. Typically over time, over a long period, inventory is going to be about zero because we're maintaining typically about the same balances. But in any given month, it might go up or down. Here we can see accounts payable. So where accounts receivable is people owing us money, accounts payable is us owing other people or businesses money. And this went down about $9,000. So that means we paid some obligations that we had. We paid some people back to the amount of about $9,000. So more cash going out. You can see that with this American Express as well. This one that ends in 006. It's another negative number. So we spent cash. Cash went out. We paid this credit card down. With this credit card, the balance is positive. So that means that we ran a bunch of expenses, a bunch of things that are on the profit and loss that are factoring into this $9,700 number. We ran those things through the card, but we didn't pay down the card. That balance went up. So that's giving us cash because we essentially have a debt. We have a liability that will probably come due the next month. And so just like with inventory, how over time we see that zero out. Some months might be up, some months might be down. On the long term, it's going to be pretty even. With our credit cards, that's hopefully the case as well. If it's not, that's because our credit card balances are growing and they're getting out of control, and we do not want that to happen. But if we're able to stay on top of it, then what we're going to see is that maybe this month it was positive, but then the next month, we pay our credit cards every 30 days. Maybe that's a negative. Same thing with this Chase credit card. Another positive number, we had some expenses. We ran through the card. We did not use any cash to cover those expenses. So that was a net positive effect on our bank accounts, at least until later when we might pay those. We have an account here that doesn't have anything, didn't go up or down. Gift card liability. So often we'll want to track the amount of gift cards that we have outstanding in our salon. A negative number in the gift card liability means that gift cards were used. Clients came in and used gift cards. So we counted some revenue, we counted some income, but we didn't actually receive cash because they had paid the cash for that a long time ago. So that's a negative $2,000. And then here's a sales tax payable account. That went down, so we maybe accumulated some sales tax. Maybe we got a little bit behind on our sales tax payments, but we caught it up. We made more sales tax payments than we incurred sales tax liability. So maybe at the beginning, we don't see these numbers, those are behind the scene, but maybe at the beginning of the quarter, we owed $3,000 in sales tax, and maybe at the end of the quarter, we owe the difference here. So maybe that's about $1,100 or $1,200 in sales tax. When we net all of these things out, we get this number right here, that we had $17,650 of negative cash adjustments to make. So we spent cash in these different areas. We increased our inventory. We paid down some debts. It's the summary of what's happening here. So then we net that against that profit, that net income. And so that gives us this negative $7,800. So these are our operating activities. This is what this section is called, the operating activities. We had some profit. We spent money to increase our inventory. We spent money to pay down some debts. At the end of the day, we decreased our cash by about $7,800. Investing activities, that's another section in the statement of cash flows that is not very commonly used. If you had any sort of investment or stocks or maybe a money market account where you're holding some money, the increases in that might flow through here, but that's pretty abnormal. We've got some financing activities. So in this case, our ABC Salon owns its building. And so it's making payments on a loan, and the balance, the principal, I should say, of that loan that's getting paid down is this negative $1,378. So that is more cash going out. The interest portion of our payments is already factored into our net income up here, because that's an expense. Interest is an expense. But what's paying down the balance, what's paying down this loan is the principal, and that shows up here in the financing activities. We as an owner in ABC Salons also took out almost $10,000 during this quarter, during July through September. So that's more cash that goes out. So that's another negative $11,000. So when we put that together with the negative from the operating activities, we have this negative $19,000. So that is how our salon had cash go down by $19,000, even though it was profitable by almost $10,000. We'll recap one more time, really quickly. $10,000 of income. Then we spent money on increasing our inventory. We paid down some debts. We took out some money for rewarding ourselves as the owner, for paying ourselves. We made a payment on our building. And so after all of that, our cash went down $19,000. We can see that we started at 120, so then we were at 101 at the end of this period. So again, that is a statement of cash flows. It's going to tell us why our profit number is not the same as our cash increase or decrease. And these are things that we can explore, we can look into. If we're concerned about our cash and where things are at, why is my inventory going up so much? Are we not tracking it well? Are things out of whack? How about our debts? Maybe it's a time to review your debts. Are we managing our credit cards well? So these are things that you can dig into and potentially find opportunities for running and managing your business better and improving your cash flow. So there you have it, the statement of cash flows.